Hey folks, today's video is about the burning question that buyers have. Should I wait to see if the interest rates are going to come down to 5s, or better yet, will they come down to 3? Will we see those again? And the short answer is probably not. And I'm going to explain why. I'm going to keep it short. I'm going to keep it sweet. So, whenever you hear the feds are meeting, they're going to announce whether they raise or lower the rates, you automatically think that is mortgage rates, but it's not. So that implies rates like car loans and credit cards, not the mortgage rates. The feds cannot lower or raise the mortgage rates, but they can manipulate circumstances that cause the rates to go up and down. And I'm going to explain. I'm going to try and keep it so that you're not bored out of your mind and drooling and wishing the video is over. But how they do this. Remember the crash of 2008, some say 2007, but whatever. 2008, our economy was tanking, gas prices were crazy high, the real estate market was crashing. So the Fed stepped in and they started to manipulate the rates by purchasing U.S. Treasury bonds and mortgage-backed securities. Now, mortgage-backed securities are like a pool of mortgages that the bank purchases, and then they sell them to investors. So when the feds buy this can cause the rates for mortgages to come down. So that's what they did. So over that, like a 10-year span, we saw the rates come down to, 5s, 4s, and even the high 3s. Now, let's fast forward to January 2020. We start hearing about COVID. And at the time, I'm like, oh, okay, we might get a little bit of, a case here and there, nothing big deal, as most people. Well, the feds were concerned. So in mid-February, they started to purchase more mortgage-backed securities again because cases were happening a lot more. This was not going to go away. And in March, we started having our shutdowns. Schools, businesses, only essential employees were allowed to work. People were coming home and working at home. So when that happened in April and May, my real estate market, which is Northeast Florida, which is like Jacksonville, Clay County, St. Johns County. And remember, my real estate market is different than yours. Or they could be similar. It depends. Real estate is very local. Like South Florida is totally different than North Florida. So when I talk about this, I'm talking about my particular real estate market. So in April and May, our sales, they tanked. They dropped. Contracts were falling apart. Everyone was getting nervous. It's understandable. No one knew what was going to happen because people were being forced to stay home. So I figured this is going to be the trend for 2020. But then in June, our sales went back to normal. It was like April and May never happened. COVID didn't happen. Now, during this time, the feds are increasing their spending, buying these mortgage-backed securities and U.S. Treasury bonds. I mean, like millions and millions. It was crazy. So what did that do? That caused the rates for mortgages to come down. Now, the inventory levels started coming down as well. And one of the reasons is sellers were afraid to put their house on the market because they didn't want people who could potentially bring COVID into their home. Understandable. So that started bringing less houses. The rates are coming down. So the buyer demand started to increase. So the market just started going crazy. And I'm like, oh, it's going to be similar to 2005 real estate market. Which I thought was pretty intense, but the 2020 through 2022 market was way more intense than 2005 ever was. So as time passed, months passed, then the sellers, they were still fearing the COVID issue, but then they were also afraid of putting their house on the market and then not having a house to go to because there was so much demand from buyers. So many of them decided, I'm going to sit this one out and see what happens. So that's what they did. That caused our inventory levels to come back down and continue to. I was shocked by how little houses there were. Craziness. So this trend continues 2021, and then in about May or June of 2022, that's the peak of how many mortgage-backed securities and U.S. Treasury bonds the Feds bought because inflation. Remember wood was going up. We were talking about wood prices and making jokes about, a couple pieces of wood was $1,000, things like that. Inflation happened. So they needed to combat that. And our real estate market was crazy. It was so frustrating for buyers. So they stopped buying it. They started less and less. So the purchases went down. So that's caused our rates to go up. So when I checked the other day, our rates were like 6.9. That's pretty high. We're almost hitting 7%. Why? Because we're trying to combat the inflation. So inflation has some play on our rates. The Feds, whenever they buy mortgage-backed securities or U.S. Treasury bonds, that has an effect. So when they back down on those purchases, that's going to cause our rate to go up. When they buy more, that's going to cause our rates to come back down. Now, always watch, instead of watching what the Feds are talking about as far as raising and lowering rates that I mentioned that is not mortgage rates, check out the 10-year U.S. Treasury bonds, and that is how you determine, what our mortgage rates are going to be doing as well. So what does that mean for sellers right now? Sellers, you probably think, oh my gosh, the boat has sailed off. It's never going to happen like this again. And you may be right to a certain degree, to a certain point. Houses are still selling. If you're in great condition, desirable area, priced well, they're going. I sold a single wide mobile home within 2 weeks. And single wides are not the most popular houses to purchase, but it sold. It was priced well, great shape. The lot was beautiful. So they're still selling, and there's even some that have multiple offers still. So we are still technically in a seller's market. And I will go over prices of the houses and stuff, but that's going to be a whole nother video. Now, for you buyers, here's the thing. If you're waiting for 3%, you're probably not going to see that unless we have another catastrophe, which I hope we don't. I don't want anything like COVID again. The Feds, they have the power to come in and out of this marketplace like that and buy these mortgage-backed securities and change the rate. They can step in at any time, but it's not always smart to do that. So for a buyer, what you can do is decide, if you wait, you may be a renter for a long time. And hey, there is nothing wrong with renting. If that's what you need to do for you and your family at the time, go for it. I will never rent shame you. I have rented. In fact, I rented a house and got my oldest through high school. I didn't want to move, and I didn't want her to have to change schools, so we rented. So you will never hear me rent shame you at all. Now, again, if you want to buy a house, you may need to overcome those rates just by, understanding that they are not going to come down for a long time. We may not see 5% for a long time. So it depends on what your goals are. Do you want to rent? Do you want to try and risk and wait it out a little bit? If you're in a situation where you may end up having to move from the area in a couple years, it may not make sense to rent or to buy a house right now. It may make more sense to rent and then move and check out the area you're going to. There are also opportunities where you can buy down your interest rate and help beat it down. Plus, there's other ways of, you could do a 15-year mortgage versus a 30-year mortgage. Your payment will be a little bit higher, but your interest rate will be less. And you'll save a lot of money on interest over the course of the loan. Again, it depends on your loans, or your goals, I should say, and your loans too. So if you have questions, feel free to reach out to me. Check out the phone number on your screen. You can call, text me. I love answering questions. I can even run some numbers. I can send you some houses so you can see what the market looks like. If you want to have a rough estimate of your payment, I can estimate that for you. So feel free to reach out to me anytime. I love questions. Have a great day, folks.